Hey friends, welcome to today's Singapore Market Digest. I'm Iggy from the Investing Iguana, and today we're looking at some interesting movements in the Singapore market. The Singapore market has experienced significant volatility recently, with the Straits Times Index, STI, taking a substantial hit following the announcement of Trump tariffs. On Friday, the STI closed down 3% or 116.37 points lower, but Monday brought even more dramatic movements, with the index plunging 7.5% or 285.36 points to close at 3,545, marking its worst single-day fall since the 2008 financial crisis. This sharp decline reflects broader concerns across global markets as investors reassess positions in light of potential trade policy changes. Let's dive into some of the key stocks that have been making headlines and what these developments might mean for investors. DBS Group Holdings, Singapore's largest bank by market capitalization, has found itself dealing with a significant cybersecurity incident. On Monday night, DBS announced that one of its vendors, Top and Next Tech, which handles the printing of customer statements and letters, had fallen victim to a ransomware attack. This security breach has potentially compromised the personal information of approximately 8,200 DBS customers, as well as 3,000 customers from Bank of China's Singapore branch. The compromised information could include customers' first and last names, postal addresses, and details related to equities held under DBS Vickers and cash line loans. In response to this breach, DBS has stated that they will be contacting all potentially affected customers to provide guidance and support. This cybersecurity incident comes at a particularly challenging time for DBS, as its shares had already experienced significant pressure in Monday's trading session. DBS closed at 39.28, down 4 or 9.3%, before the announcement of the data breach was made public. This sharp decline was part of the broader market sell-off, but the news of the cybersecurity incident may create additional pressure on the stock in upcoming sessions. For context, DBS has been a cornerstone of Singapore's financial sector, with a strong track record of performance and dividend payments that have made it a favorite among local investors. The bank has been expanding its digital capabilities and regional presence over recent years, positioning itself as a leader in Southeast Asian banking. However, this incident highlights the growing cybersecurity risks that financial institutions face in an increasingly digital environment. The trading volume for DBS was significantly higher than average during Monday's session, indicating heightened investor activity amid the market turbulence. From a technical analysis perspective, the stock has broken below several key support levels, suggesting that we might see continued volatility in the near term. Looking at the broader banking sector in Singapore, other major banks like OCBC and UOB have also experienced pressure, though the specific cybersecurity concerns are unique to DBS at this point. Investors should watch closely how DBS manages this situation, as their response could impact customer trust and, by extension, the bank's reputation and stock performance. Singapore Exchange Limited, SGX, the operator of Singapore's securities and derivatives market, has itself been caught in the market downturn. As the platform that facilitates trading in Singapore, SGX often sees its own stock performance reflect broader market sentiment and trading activity. Shares of SGX closed at $13.02 on Friday, but experienced a dramatic fall of 9.5%, or $1.23 to close at $11.79 on Monday. This significant decline came amid the market-wide sell-off, with the STI recording its worst performance since the 2008 financial crisis. For those unfamiliar with SGX's business model, the exchange generates revenue primarily through listing fees, trading fees, and market data services. Interestingly, while market downturns typically hurt most stocks, periods of high volatility can sometimes benefit exchange operators like SGX due to increased trading volumes and clearing fees. However, if volatility leads to sustained negative sentiment and reduced market participation, SGX could face headwinds. The recent market turbulence has likely led to elevated trading volumes on the exchange, which could potentially boost SGX's transaction-based revenues in the short term. However, if the market uncertainty persists and leads to reduced listings or trading activity over time, this could negatively impact SGX's longer-term performance. From a technical analysis standpoint, SGX shares have broken below the 200-day moving average, which often signals a potential change in long-term trend. The stock is now trading at levels not seen in several months, and investors will be watching closely for signs of stabilization. In the broader context of global exchanges, SGX has been working to enhance its product offerings and attract more international listings to compete with larger regional exchanges like Hong Kong. The exchange has also been investing in technology and expanding its derivatives business. How SGX navigates this period of market volatility could provide insights into its operational resilience and strategic positioning. Thackrell Corporation, a company with diverse business interests spanning real estate, lifestyle products, and investments, has recently addressed market rumors regarding one of its key associates, GemLife. GemLife is a developer of resort-style living communities in Australia and represents a significant part of Thakral's investment portfolio. Responding to speculation, Thakral has clarified that while GemLife is currently considering its strategic options, which may include the consideration of a possible initial public offering, there is no certainty or assurance that any transaction will actually materialize. The company further disclosed that GemLife is planning to conduct introductory meetings with potential investors, suggesting that they are exploring various capital-raising options. Shares of Thakral closed at $0.78 on Monday, down 0.1 or 1.3% before this announcement was made public. Compared to the broader market's steep decline, Thakral's relatively modest drop suggests that the stock was somewhat insulated from the market-wide panic selling. For those not familiar with Thakral's business, the company has transformed itself over the years from a traditional trading business to a more diversified investment company with significant real estate interests, particularly in Australia. GemLife represents one of its more successful investments, focusing on the growing market for retirement and resort-style living communities in Australia. The potential IPO of GemLife, if it were to proceed, could unlock significant value for Thackrell shareholders. Australia's aging population and increasing demand for high-quality retirement living options have created favorable market conditions for operators like GemLife. However, as Thackrell has emphasized, these discussions are preliminary, and investors should temper expectations until more concrete information becomes available. That's all for today's Singapore Market Digest. I'm Iggy from the Investing Iguana, reminding you to stay informed, stay patient, and happy investing. That's all for today's Singapore Market Digest. I'm Iggy from the Investing Iguana, reminding you